When I was going to interview you today, I got into the office and I actually Googled, right, the common challenges of a tech company. And this is what Google told me. The top 7 challenges: lack of money, neglecting marketing, lack of planning, finding the right people, weak co-founders. Does government ever feel like a tech startup, Chancellor?
Well, I guess most tech startups would kill to have the kind of lack of money that we have. And I'm very flattered that you think government can be as agile and visionary as most tech startups.
Talk to me about how you look at tech companies. How do you boost competitiveness, innovation, and better outcomes for consumers?
Well, we see tech businesses as driving Britain's future. And of course, we have to ensure that we create an environment that's welcoming to them. Many tech startups in the UK are started by people who come here from abroad, so we have to continue to attract them here, and then we have to have an environment that facilitates their growth. That means a regulatory environment that's sensitive to their needs. I don't mean a race to the bottom. Well-regulated environment with regulators who are innovative. We have to have a capital market that can deliver the kind of long-term capital that growing businesses need. We recognise that that's still an area where we have work to do in the UK. And then, of course, at the core of every tech business is talent and access to talent. And that's a twin-track approach. We have to do better in growing the UK's own talent, making sure that kids coming through our schools, graduates coming out of our universities, have got the breadth of skills that industry is looking for. And it also means having a migration regime which encourages the best and the brightest to come here, and that doesn't create a lot of bureaucracy for businesses who are trying to bring people in.
Are you confident that regulators understand tech companies, or because of the pace of change, there's a worry that regulators are always playing catch-up?
Yeah, well, I think that is always a concern anywhere. So regulators will always be running to catch up with the cutting-edge changes that are going on. But this is a relative game. I think you have to look at how UK regulators perform compared to regulators in other jurisdictions. And I believe, and I hope the audience would agree with me, that actually smart regulation is a UK competitive advantage. We've put a lot of resource into trying to make sure that our regulators are focused on keeping ahead of the curve, or at least keeping up with the curve. And we do see this as a key UK strength that we want to build on in the future. That's why we've put money into Regulatory Innovation Centre, so that our regulators themselves can use the latest technology to facilitate the way they do regulation.
The government has done a lot of work for tech companies, but how difficult was it whilst dealing with Brexit?
Brexit has obviously taken up a lot of political bandwidth, but we can't lose sight of driving the UK economy forward. One of the good news stories over the last 3 years has been, despite the uncertainty that the Brexit story has created around the UK economy, we've continued to deliver solid growth. I mean, not spectacular growth, but solid growth. We're in our 9th consecutive year of economic growth now, which is a good performance. We'll grow this year nearly 3 times as fast as the German economy is predicted to grow. We've got record levels of employment, record low unemployment, and that's largely due to the fact that we've got a very vibrant industry in the UK, in the tech sector, in services, and we are strong in areas which are growing globally. We need to make sure we maintain that presence and that leadership. So we can't afford to let the ball drop.
What does Brexit mean for tech regulation?
We don't know, of course, yet exactly what our relationship with the European Union is going to be in the future. But the UK will always ensure that we have a competitive regulatory regime. That's more complex in areas like financial services, and obviously many tech businesses are focused in financial services. It's easier in less regulated areas of the economy. I mean, data is going to be a big issue. Managing our future data regulatory regime in a way that is compatible with European Union regimes, but also allows us to work effectively with other jurisdictions overseas is going to be absolutely crucial for the successful future of the British economy.
So there have been a number of papers, green papers, or the Furman Review, talking about some of the challenges that some of the tech companies, of course, have. Is skill shortages one of them? What's the biggest concern that a lot of the companies have?
Well, skill shortage is obviously a global concern for business. Getting people with the right skills has become the core challenge for pretty much all businesses everywhere. And if you can get people with the right skills, then the capital will flood towards you. That's not the issue anymore, I think. But the Furman Review was really focused on the proposition that as the economy changes, the regulatory structures that we've got in place have to change with it. I mean, many of our competition regulatory structures were put in place to deal with sort of railway monopolies and banking monopolies at the turn of the 20th century. And they're not any longer necessarily fit for purpose. Part of our proposition, our offer to the public, to our electors, is that a market economy works because through competition, it delivers benefit to consumers. We have to constantly test that proposition. If we find that the economy is evolving in a way, for example, through digitization, that means the market economy model is no longer delivering those benefits of competition to consumers, then we need to adjust the model. We need to change the regulatory structures, because the only reason that the market economy model works and is accepted is because it delivers for consumers rising levels of prosperity and competitive markets for them to buy their goods and services.
London was very good at attracting tech companies. What made it so attractive? And do you worry that Brexit will take its toll, that actually tech companies will move to the continent?
Look, we should never be complacent, but I don't honestly believe that tech companies are going to flood to continental Europe. I think there are lots of reasons why tech businesses are attracted to the UK, and we will go on ensuring that we have a competitive and attractive environment here. And some of those advantages are not so easy to copy. The English language, the legal system, our common law system, is a very good environment to do business. It's not so easy for our continental neighbours to copy that. But we shouldn't be, and we're not complacent. We know that many people around Europe are rolling out the red carpet to tech entrepreneurs. But the numbers speak for themselves. The UK is still attracting the largest share of tech investment in Europe, and the UK stands proudly alongside China and the US in terms of developing the next generation of tech unicorns.
And this is why? Is it because of the infrastructure? Is it education? Is it some of the research centers?
It's partly all of those things. It's the English language, it's our legal system, it's our business environment, it's the brilliance of our universities and our research institutes. It's the interaction, I think. Somebody said to me, a tech entrepreneur said to me, that Silicon Valley is a brilliant place, but it's a monoculture. You come to London and it's a pluriculture. Your next door neighbour is probably not going to be a tech firm in London. Your next door neighbour may be a creative industry player or a global services provider. And it is that pluriculture and the way that different sectors feed off each other. Tech, we talk about tech, but actually, tech is present in every sector of the economy, and it's that interaction, the critical mass of London, and just the fact that London's a great place to live.
Do you think that tech will still be will it be a priority for the next Prime Minister?
Oh yes, I'm absolutely sure. Look, there's no future for Britain other than as a high-wage, high-skill economy. And if you want to drive our economy up the skills curve, up the wage curve, you have to drive it up the technology curve. We have a productivity challenge in Britain. We're behind our competitors on productivity. I prefer to think of that as a hidden advantage. I know where Britain's growth is going to come from over the next 20, 30 years, simply by catching up with our principal competitors on productivity. I'm not so sure where Germany's growth is going to come from, given its demographic profile and the fact that it's already very high up the productivity curve. But we have to embrace technology, and anyone who wants to drive living standards, real wages in this country will be fostering a tech sector. And frankly, any politician that doesn't want to drive living standards and real wages is probably not going to succeed.
Chancellor, you've just come back from Japan at the G20. How confident are you in the change of the international tax regime to better handle these tech companies?
I'm not confident that we're going to get there quickly on an international level. There's some ambitious talk going on, and we are absolutely engaged at the forefront of this debate. My French counterpart has set the challenge of delivering an internationally agreed change to the tax law by the end of this year. It's a nice idea, but I think it's incredibly ambitious. Given that you can only do these things by consensus, and given that, to be quite frank, there is a difference of view at the moment between the Europeans and the Americans about the scope of changes to the tax law. The Europeans tend to want something that's narrowly focused on digital and that deals with what is perceived to be a gap in our tax system, where global digital platform companies are not able, I'm going to put it like that, are not able to contribute tax in the jurisdictions where they interact with consumers, because the current tax law places their tax liability back home where they're domiciled. The Americans would prefer a more widespread review of the way international taxing rights are divided. It's a perfectly legitimate argument that the US have put forward, but it isn't going to be solved in 6 months.
And what we're talking about is some of these, tax targets actually targeting sales and not profits. Is there a risk of double taxation?
We've been very careful to design our national digital services tax, which will come in next April, if we haven't agreed a global system by then. And we're very clear that if we do agree a global system in the future, we will then disapply our national digital services tax. But we've specifically designed it to try to avoid any double taxation risks as far as we possibly can.
Will the tax measure proposed for April 2020 in the autumn budget actually need to be implemented?
Need to be implemented? Well, if we haven't reached a global solution by April next year, we will implement the UK digital service tax. And then when we reach a global conclusion, as soon as that's applied, we will disapply the UK digital service tax. France is going to do exactly the same.
Are you convinced that this is, the same path that the new government will take taxation and tech companies, or do you worry about a 180-degree turn?
No, I don't think there's any likelihood of a 180-degree turn, because there is a clear public demand that tech companies pay fair taxes, and that particularly the global. We've targeted our tax on the very largest companies, and it is simply giving them the ability to pay some tax in the jurisdictions where they add value. They're not avoiding tax in any sense. It's just that the current tax rules make them pay their tax somewhere else. And I think many of them will feel that it's the right thing to have a fairer distribution of their tax burden. It's not about them paying more tax. It's about spreading their tax contributions more fairly around the world to the places where they generate value. And the key identifier of the liability for this tax is a business model that generates value through interaction with the consumer, either the uploading of consumer content or the sharing of data by a consumer.
Chancellor, I wanted to ask you also about climate change.
Yeah.
Are you fully behind what's been proposed and said?
Yes. Today we're announcing that the UK will legislate, and will legislate today. We're tabling the statutory instrument today to move our target for 2050 to net zero. So this will be an economy that delivers zero net carbon into the atmosphere every year. It's a huge challenge. It's absolutely right that we took the time across government to evaluate the significance of the recommendation we got from the Climate Change Committee, but we were never in any doubt that we were going to do this. We just wanted to make sure that we legislated in a way that gives us enough flexibility to do it sensibly and properly. We will retain the flexibility at the margin to use internationally traded carbon credits. The last 2 or 3% of decarbonisation in an economy is incredibly expensive, and it may make sense to buy credits from countries that have carbon reduction projects that can use that money more effectively at the margin. And we also have to use the UK's commitment as a lever to persuade other countries to follow us. We clearly don't want to be in a position where UK industry is disadvantaged compared to our principal competitors, but I'm very confident that the decision we've made today will give a boost to those in the EU that are urging the EU to go down the same route. And I think, if the world's largest trading bloc is committed to zero carbon by 2050, that will be a huge boost to the crusade to end the climate change threat to our future.
You think it's really a trigger?
Oh yeah, I think so. We were the first economy to impose on ourselves a statutory obligation to decarbonise. We will now be the first large economy, with all due respect to the Swedes who've already done it, we'll be the first large economy to commit to net zero in 2050. And I think that will be a wake-up call to others around the world. The French are heading in the same direction, and I hope the EU will be not far behind.
Chancellor, Boris Johnson is launching his campaign shortly with a promise to get Britain out of the EU on October 31st. Will he be able to do it?
I don't think so, and I've said this publicly. I think it's not sensible for candidates to box themselves into a corner on this. Parliament will not allow a no-deal exit from the EU, and our experience to date has suggested that it may not be that easy to agree a deal in Parliament, and also tells me, although Boris and any other candidate is perfectly entitled to say that they need to go and test this for themselves, but I can advise them that the EU is not likely to be prepared to reopen the withdrawal agreement that we've already negotiated with them. So I think it will be very difficult. In fact, I think it will be impossible to do this by the 31st of October, and I don't think it would be in our national interest that we drive towards this cliff edge at speed.
So how should investors and how should entrepreneurs look at this? There's another attempt to block a no-deal divorce in Parliament today. Is no deal more likely now than it was 2 months ago?
No, I don't think so. And I've just come back from Japan, where I've spent a day of my trip in Tokyo telling Japanese investors, and we have a lot of Japanese foreign direct investment in the UK economy, that whatever noise they hear, the fact that we're changing the leader of the Conservative Party and changing Prime Minister doesn't change the basic dynamics of this problem. The parliamentary arithmetic remains exactly the same. The European Union's position remains exactly the same. Now, the Europeans they've already been clear about this, they'll be very happy to talk to the new Prime Minister, but they're not going to reopen the withdrawal agreement. Parliament will no doubt be very interested to hear what the new Prime Minister has to say, but in my judgment, Parliament isn't going to change its position that it will not license a no-deal exit.
But so what would unlock the solution? I mean, we still have 4 or 5 options.
That's a very good question, Francine, but if I knew the answer to that, we probably wouldn't be in the last 5 weeks of our government now. Look, I mean, I'll put it very simply. Either Parliament has to find a compromise that it can coalesce around, and a deal will be done, or we will have to go back to the British people through the democratic process, either with a referendum or with a general election, to test public opinion again on this question.
How many questions did you get on this at the G20?
My international colleagues are, of course, extremely interested in this issue. And yes, I spend about half my waking day usually talking about Brexit. That's on a good day, half.
Chancellor, what's your advice to leadership candidates on UK public finances?
Well, our public finances are now in very good shape, as I think I said at the beginning. As is well publicised, we're forecast to have a reasonable amount of headroom, about £27 billion of headroom, to the fiscal rule that's currently in place in 2020, 2021, next year. So once we've got the risk of a no-deal Brexit off the table, and I hope we will have before we get to the next financial year, then it would be safe to release some of that headroom. Now, different candidates will have different views about whether they want to use that fiscal capacity to increase public spending, to support public services, to invest in capital projects, infrastructure for the future, to reduce debt more quickly, or to make cuts in taxation. And that's a perfectly legitimate political debate to have. I would just say two things to all the candidates. First of all, be mindful of the fact that so long as no deal is a risk, we need to retain that buffer, that war chest, to protect our economy from the immediate shock of no deal. There will be lots of businesses, lots of citizens who need support if we find ourselves in a no deal exit. And until no deal is definitely off the table, we have to retain that firepower. And the second point is that more spending on public services, cuts in taxation, are both perfectly legitimate objectives and desirable things in themselves. But they're only desirable if they're affordable and funded. And I would caution any of the leadership contenders in going beyond committing the headroom that we know we will have and starting to move into the realms of unfunded spending or tax-cutting commitments. It is simply not the case, as some people like to assert, that tax cuts pay for themselves. And the important thing to remember about the Laffer curve is that it is a curve, not a straight line. Just because at one point on the curve cutting taxes increases revenue does not mean that at every point on the curve cutting taxes increases revenue. And I think there's a bit of a misunderstanding about that among some of my colleagues.
Do you think, campaign promises are one thing and people change when they're, faced in power with the reality of the markets and investors?
How could you suggest such a thing, Francine?
I'm a cynic.
You're trying to suggest to me that politicians say one thing when they're campaigning in an election and then do something different after they've been elected. I can't imagine. I can't imagine that.
Chancellor, one word of advice to any entrepreneur looking to invest in the UK. How should they look at the next 18 months?
You'll find you're on the right side of history, because this is going to be one of the great centres of tech and innovation over the next few decades. East Asia, West Coast of the United States, UK. I'm absolutely confident about that, and I know all of you are, or you wouldn't be here today.
Chancellor Philip Hammond, thank you so much for your time today.
Thanks, Francine.